Hello, everyone, and welcome to It's Not Too Late to Save on Your Taxes, sponsored by RISMedia and Intuit. I am super excited to be with you here today. It's going to be a jam-packed session, and I see there are still tons of people joining right now at the very minute. So we're going to get started because it is a jam-packed 60-minute webinar, and I believe I may use all of those minutes. But I'm going to go ahead and also just do a quick introduction in the beginning to give a few more of you some time to join. Also, definitely want to make sure you're all aware of where the questions and answers box is. If you haven't joined a GoToWebinar before, on your panel, you have a questions area. Would love for you to just jump in there really quickly, say hi, let us know where you're calling from, and just making sure that you know how to ask questions in here, because this will be interactive. Now, what I say by that is I will be covering tons of content, and I want to put a lot of context behind it. But we also will have Peter and Rivali in the background, and they'll be able to answer some questions for you here and there. And I'll also try to take breaks after some heavy topics to just see if I have any questions I could answer publicly to all of you. Also, as a reminder, this session is being recorded, and for that reason you're all on mute, but of course you can ask questions in the questions and answers box, and you'll also have access to the handouts, which are also already in the handouts area, so you can go ahead and get access to the handouts now, or you'll have that in the same link that you get later on tonight, which will have access to the recording and the handouts. So there will be a lot covered. Don't feel overwhelmed, and don't feel like, oh my goodness, how am I going to get all this information? You can absolutely, like I have many times, go back and listen to the recording slowly, pause where you need to get all of this information, on your own time. Okay, so let's get started. Again, welcome to It's Not Too Late to Save on Your Taxes, sponsored by RISMedia and Intuit. It truly is my great pleasure to spend the next hour with all of you. Let's unveil the importance of understanding real estate accounting and preparing your finances and documentation for the best tax preparation situation that you can go ahead and set yourself up for this year. So if you're still preparing 2018 taxes, you still have time, but more importantly, just going forward for all future years. So let's talk about that. And absolutely, there's still time to set up for this year. That's why this is really timely. We're doing it in early March. But the techniques and the actionable steps we're going to cover is something that, we as trainers here and bringing this information to you, we really want this to be something going forward. So it's really going to be techniques, tools, and tips that you can take with you going forward. And in addition to breaking down real estate accounting, which is what we're going to start with, we're really going to focus on the differences and similarities of real estate accounting, but we're also going to share some tools and best practices, again, on how to prepare your accounting easily and accurately to be able to catch up on your accounting and prepare for taxes. Very common this time of year to have to catch up on your accounting. You may have had a really great year last year, but you haven't had a chance to go ahead and pull those numbers together, pull those documents together. And so we're going to give you some techniques on how you can go ahead and prepare best to close out last year and get ready for your tax preparation appointment. We're also going to introduce you to Sophia. She's a first-year real estate agent and a sole proprietor, and she needs to quickly learn how to prepare her accounting because she has an upcoming tax appointment, and she wants to make sure she's doing it in an efficient manner and, of course, in the most tax beneficial manner. So we're going to go ahead and introduce you to her situation and what she can do to go ahead and get ready for her tax appointment. And throughout this entire session, we're going to be sharing tools and resources that can help you manage your small business real estate finances. But before we go any further, let's go ahead and ask ourselves the most important question and truly the objective for today's webinar. How do we really set ourselves right and save on taxes? And the answer, it's truly much simpler than we think, and this is it. We need to become financially literate around our specific business industry, and we need to focus on accurate and real-time bookkeeping and accounting practices, which are going to provide us with a brand new, more exciting, and more efficient playing field for our business and being able to make stronger business decisions around our business. It also allows us and our financial partners that serve us and help us, like our accountants and our bookkeepers and our tax professionals, to be more proactive when it comes to tax planning and tax strategies and tax preparation. And when they're more proactive, that in turn translates to tax savings. So, many of us want tax savings, but without good books, we actually miss out on the chance to have better and stronger tax strategies and tax savings. So today, we're going to focus on gaining that financial literacy and learning the best practices on preparing our books the right way. So let's get started. I'd like to introduce myself to all of you. My name is Mariette Martinez. I'm a small business advisor and public educator. I focus on designing and delivering powerful and impactful small business success training to micro businesses, the self-employed community, and the small business partners that want to serve and strategically support this community. I've been an IRS enrolled agent and an accountant for over 20 years, and I'm also a writer and creator for the Intuit Trainer Writer Network, which is a network that allows many accounting and tax and bookkeeping professionals write and create content that we can provide to bigger communities, and that's really the reason why I'm here today. So it's an honor and pleasure to cover today's topic, and again, a big thanks to our sponsors, RISMedia and Intuit, for allowing me to be here today. I'm a mommypreneur of 3 children, all under the age of 3, and I'm also the sole owner of Mariette Martinez, a small business advisory firm, and also Master Your Books, which is a small business educational platform. And my current passion project is TresMaestras.com, which is a bilingual entrepreneurial e-learning platform that's been co-founded by myself and 2 Latina partners, where we're going to bridge the financial literacy gap for both English and Spanish-speaking business owners and their financial professionals. So again, super excited to be here. And honestly, my why that fuels me every day is that no business is left behind due to the lack of financial education, literacy, and awareness, and also connecting these business and passionate owners with the partners that want to help them grow and thrive. And that's why I get up, and that's why I educate, and that's what I do every day, what I do. So again, thank you all for being here, and thank you again to the sponsors for allowing me to be here. So what are we going to cover today? We're going to cover breaking down the real estate accounting topic, preparing for taxes right, and then we're going to cover which QuickBooks is right for you. So, one of the most common questions I get when I start supporting my small business clients is I hear about QuickBooks, I hear about the importance of having electronic solutions, electronic storage, organizing myself, but I just don't know which one is right for me. So let's talk about that. Then we're going to talk about when QuickBooks Self-Employed, which is one of the versions of QuickBooks, is right for you. What does that look like? And we're going to introduce some of the top features that this version of QuickBooks has. And then we're going to go ahead and give a bonus round. And we're going to talk about if you need to catch up on your accounting, what do you need to do that? Catch up on a whole year of accounting. And then we're just going to give you a quick slide at the very end on some top tax deductions for real estate professionals. Again, throughout the day, throughout the hour, I'm going to try to do some Q&A, and then I'm going to try to get some at the very end as well. So before we go any further, I really would like to get to know the room. So let's go ahead and do our only polling question for today, which is going to be, what type of real estate professional profile do you most identify with? So if you can all answer that question for me, I just really want to know who's in the room. I'll be speaking to all of you in the room. So today's topic really is applicable to everyone in the room, everyone in the real estate industry, because there's so many parties, but would love to know who is actually going to be in the webinar with us in the next hour or so. And if you are an other, I would love to know who the other is. So who is the other? Who are the other people? Maybe you're a hybrid of all of these profiles. Maybe you are, a strategic partner of the real estate industry. So if you are an other, feel free to go ahead and jump into the questions and answers box and let me know how you identify as an other. Okay, and so hello to all of you. We got Michigan, we got Florida, we got South Carolina, California, Kentucky, Indiana, thank you all for being here. New York, Ohio, Connecticut, Virginia, Massachusetts, Washington. Hello, everyone. Thank you for being here. Okay, so let's go ahead and get started, and thank you for going ahead and sharing that. It looks like we have almost 70% of you are in the real estate agent profile, and almost another 25% of you, so almost 100% right there, are real estate brokers, of course, serving the real estate agents and yourselves. And then we have a couple of investors, we have a flipper, and we have some others, and I'm curious to know who those others are. Okay, so now let's get started. Let's get started first with what is real estate accounting. Why are we even having an entire topic on real estate accounting? And let me go ahead and share why. The reason why is because we need to do accounting for our businesses. We talked about that earlier. It's incredibly important to do accounting for our businesses. But real estate accounting, it's a whole nother animal. There are general accounting practices for businesses, and then there are specific accounting for real estate industries and real estate profiles. So we're going to cover that. Now, when you're learning about real estate accounting, you're going to see and you're going to learn and find out that there's bookkeepers, financial professionals, tax professionals that have decided to focus in this specific industry. And because of that, they have additional skill sets. For instance, they know how to recognize the different real estate profiles. They've learned the specific accounting terms and tasks. They can organize and prepare financial reports specifically for real estate transactions like purchases and sales and escrows, and posting and reading the settlement statements, and organizing, when there's multiple properties and whether that person is investing in those properties or flipping those properties. So many things that you need to know if you are focusing in the real estate accounting area. But let me tell you all something. Great if you can find a team and a partner and an accountant and tax pro that knows this, but guess who needs to know this more than anybody else? All of you. You all need to know this really, really well, because the person that is running that business, the person that gets up every day and sweats and, wakes up and goes to sleep and thinks about this and dreams about this or has nightmares about this is all of you. You need to understand real estate accounting and really become financially literate in this area. And that's why, again, I'm just super excited to have all of you here. So let's start with some differences about real estate accounting. So first, let's talk about learning the bookkeeping basics around real estate accounting. So there are bookkeeping basics in general, which we'll cover in a minute, and then there are bookkeeping basics that are specific to real estate accounting. For instance, how does money flow in and out based on a real estate profile? We're going to talk about profiles in a minute. Also, how do you report specific transactions based on specific real estate profiles? So if you're an investor, you may have to report it one way, and if you're a flipper dealer, you have to report it another way. How do you set up the chart of accounts for a specific real estate profile? Very, very different. A real estate agent may have much more simpler chart of accounts. That's their list of all the categories of their income and expenses. But an investor may have more a comprehensive one, and a flipper may have even more accounts than an investor has. So it's really important that you understand that the setting up, the initial framework of setting up your accounting, your solutions, your lists, your categories, your chart of accounts, it's all based on your real estate profile. So we need to know and we need to recognize and identify with our real estate profiles. Also, the documentation and record keeping is also very different when it comes to real estate accounting. Now, after you know the bookkeeping basics, guess what, ladies and gentlemen? You also need to learn the tax preparation basics. Yes, I'm not saying you need to go ahead and learn taxes or be a tax preparer, but you are signing on the dotted line. You are stating that everything on your tax returns are correct. So you do need to understand the tax preparation behind the numbers. For instance, the tax implications of being one real estate profile over the other, the tax forms that you would file as a real estate business owner, how to report and when to report specific items on your tax returns, which businesses qualify for specific deductions or for specific credits, and do they all qualify at the same time? Absolutely not. You may need to report expenses differently as an investor versus as a flipper dealer. So we want to make sure you're all aware of that. Now, what's the same about real estate accounting? Now, this is all businesses need to know these things. They first need to know how the books to tax life cycle works. And so the books to tax life cycle is essentially the full life cycle of your business when it comes to all the accounting tasks, all the way till when you have to prepare a tax return. What does that look like? You have to track your income statement items, items that are income, items that are expenses. You need to track your balance sheet items, your assets, your liabilities, and your equity. You need to comply with accounting and tax deadlines. Everybody does. It doesn't matter what industry you're in. Everyone needs to comply with accounting and tax deadlines. You need to be able to project your income so that way you can pay your taxes and stay compliant with your taxes. You want to organize your documents so you have easy access, because especially when you get more complex, when you are an investor or your dealer, you have so many documents you need to file away. And so what is the best way to organize those so that way you are not completely overwhelmed? Take advantage of technology. Allow technology to allow you to work smarter, not harder, and manage your finances in a more efficient manner. And then growth, right? At the end of the day, what is your end game? Why are you even doing what you're doing? Hopefully it's for financial growth. Hopefully it's for financial wealth, right? And so we need to be able to interpret our numbers, our income statement, our balance sheet, our cash flow statement. We want to go ahead and maximize our income and minimize unnecessary expenses. We want to be able to work with our professionals, our advisors, our financial team to tax plan and strategize. And what do we want to do with that? We want to save on taxes and possibly defer taxes, right? We're not talking about evading taxes. We're talking about being strategic around taxes. And again, choosing that best accounting professional or financial professional that can grow with your goals. And why is it important to know both real estate accounting and general accounting? Because knowing both provides you the financial literacy and the clarity to organize and manage your business based on your needs. Everybody is different on this call. We proved it right now with the poll. So we want to make sure you have the literacy and the clarity based on what you're doing in your business. And what does it gain for you? What is the winning? Why are you even here? You're going to gain the ability to be able to make decisions on your financial profitability, on your personal profitability, on how you want to grow next, on saving taxes and deferring taxes and staying compliant on your obligations. You're going to be able to set goals and achieve your goals, right? And at the end of the day, you're going to be able to secure a stronger future for yourself, for your family, and for your loved ones. So we're going to go ahead now and talk about the common real estate profiles that we hear all the time, or at least I hear, because as a financial professional that's focused in the real estate market for almost a decade now, I've been doing this for 2 decades, but I really have focused in real estate over the last decade because I really have a passion for all of you, number one. I really believe you are incredibly passionate, incredibly hardworking, but sometimes you struggle on the accounting side. So I have taken a big effort to try to help real estate professionals. And so these are the 3 main profiles that I have come across. The first one is the real estate agent, right? The real estate agent assists with buyers and with the buyers and sellers of the real estate. A real estate investor, they buy and hold real estate. What's most important when it comes to real estate investors is that their intent is to hold that real estate long term. Now we have our real estate flipper dealers. They buy and fix and flip real estate. So their intent is to hold it in the short term. That is so incredibly important. What I just said is what their intent is, because right now, particularly the tax code around investors and dealers is still a gray area, and it's really based on the intent. What was your intent when you purchased that property? And, you know, there's many techniques on how to go ahead and document that intent, whether you document somewhere in your minutes, if you're a corporation or a partnership, if you document it every time you buy a property and you document it, let's say on the settlement statement, in your accounting solution, in your QuickBooks. If you purchase it, a lot of my QuickBooks clients will purchase the property, and when they buy it as an investor, they'll put the property address and they'll put -I. Because they bought it as an investor and they're going to hold it. When they buy a property they're going to flip, they'll call it an address F or dash D because it's a flipper dealer property. And so you really need to make sure you're documenting your intent. Let's go a little bit more detail on the typical items or discussion topics when it comes to each profile. So when you have a real estate agent, right, mostly their discussion is, okay, so how do I get my accounting together? How do I organize my paperwork? How do I make sure to capture my income correctly? How do I get the most, be able to qualify for the most expenses, which may or may not be deductible, because, when you pay for an expense, you are spending for that business expense, but you're not sure whether you qualify as a tax deduction. And why? Because the tax deduction is based on the tax code. So whether or not you spend is one thing. You can have tons of business expenses. You qualify for the tax deduction based on the tax code. And so these are the very common topics I get asked, or the items. I have sales commissions coming in. How do I document that? I have all these costs related to the sale of that property that I have to go ahead and pay out. I have to market and brand myself. I use my personal business for my real estate business. How do I go ahead and capture that? How do I capture my mileage? I take out my clients to eat. Do I qualify for the meals deduction, right? We all know, or hopefully you all know, that the meals and entertainment law changed dramatically from 17 to 18. There's no more entertainment deduction now, only meals, and meals has changed as well. So you want to go ahead and find out what that is. Also, many real estate agents may be sole proprietors, or they may be S corps. They may be a sole shareholder of an S corporation, which means what? Which means now they are an officer employee of that corporation, so they need to put themselves on payroll. So now they ask me questions about payroll. So these are all questions and discussions that are incredibly important for real estate agents. Then we have our real estate investor. This is the individual, the professional that has the intent to hold their purchase long term. What do I mean by that? Well, when they purchase that property, they're most likely going to rent it, right? So now the discussion is around rental properties. How do I capture my rental income and expenses? How do I deal with repairs and improvements? Do I need a property management company, and how do I get one? What if I have a property management company? What type of documents should they be providing me with, right? How do I deal with security deposits? My rentor comes in and I asked him for $1,000 security deposit. Well, remember, that deposit is not your money. It's going to be returned to the client, to the renter, to the leasee, right? And so you want to go ahead and be capturing that in a specific account so you can pay it back to your clients. But most importantly, is that a real estate investor's intent is to hold that property long-term, which means that purchase is a long-term asset, and which means when they sell that asset, if there is capital gains, if there are profits on that sale, it's taxed at the long-term capital gains rate, which is lower than our ordinary income tax rate. That is the most critical area that you need to learn, that you are going to be taxed differently based on the intent of that purchase, okay? I gotta say that again. You are going to be taxed differently based on that intent of that purchase. Now, let's talk about our flipper dealers. Wow. I have been working with flipper dealers for several years now, and I got to give them credit. They got a lot going on. There is so much paperwork, and it's happening at like Speedy Gonzalez speed. Very, very fast. A lot of stuff is going on, and they need to really stay on top of their documentation because there's just so much stuff going on with their paperwork, with their documentation, with the buys and the sells, with the buy and selling of the properties. So these are your fixed and your flippers. Okay, they are hiring contract labor really, heavily because they're trying to fix and flip, right? They're trying to get that property nice and good and ready to sell. They're having some holding expenses. So for instance, if you're an investor, you may be doing some expenses for your properties that are long-term. Maybe you told your leasee, your renter, I'm going to go ahead and pay for some utilities. Obviously, you got to pay for property taxes for that property, homeowners insurance, HOA dues, but you're doing that every month and you're paying for that every year. Well, remember, if you're holding a property, even if it's for 6 months, somebody needs to pay those utilities. Somebody needs to pay those HOAs. Somebody needs to pay those property taxes. And so the flipper dealers have the same expenses as the investors, but it's quicker. It's faster. And so that's why I call them temporary expenses, because they may only be paying those utilities for 6 months, 8 months until they're ready to flip that property. Also, some really heavy context around flipper dealers. Many times they use lenders, private lenders, and so they have to pay a cost of capital to go ahead and inject capital quickly into their business so they can fix that property. Then they have to sell that property, and then they have to pay back those private lenders. So again, a lot going on in the flipper dealer. Now, I'm going to pause because I really want you to see and hear and feel my intention on what I'm going to say right now. When you are a flipper dealer, your intent is to hold short term, which means that your profit is going to be taxed as ordinary income. Oh my goodness, what is this? Sorry about this. This is not supposed to be coming on. I don't know why that came on. Sorry about that. So your property sale, so your profits is going to be taxed at ordinary income tax rates. That is huge. Why? Because that's higher than capital gains rate. And so again, you have to understand and know and be very, very clear on the intent of that purchase and document that purchase. Because let's say you decided to start as an investor and then go to flipper dealer. Well, any properties that you end up selling as an investor, you're going to be paying taxes from the capital gains rate. But any properties you're going to sell as a flipper dealer, you're going to pay the ordinary income tax rates because you are in the ordinary business, trader business of buying and flipping homes. That is an ordinary trader business. That's not long-term. That's not passive. And so this is incredibly important, everyone, that the intent to hold short term will have you pay taxes on the ordinary tax rates, and you may also be subject to self-employment tax because as a sole proprietor or as a partner that's doing self-employed businesses, you are going to be taxed the self-employment tax. Okay, I know this was a heavy slide. That was intentional because there's a lot going on this slide. Again, you're going to have access to this afterwards, and you're going to also have access to this recording. And the one other thing I wanted to go ahead and provide as a resource is there's a woman by the name of Lisa Puerto, and she is an agent and also has an amazing podcast called Ready, Set, Real Estate. And I was on a 3-part series with her last year, October, November, December, where I actually covered in depth each one of these profiles. So you can find that series on my YouTube page at Mariette Martinez EA on YouTube, or you can ask me for it at the end of this webinar, and I'll go ahead and provide that to all of you. Okay. So, how is everybody doing out there? So now that we know our profiles, and now that hopefully you can identify a little bit better with your profile, we're going to go ahead and talk about preparing for tax time. Before we do, though, I'm just going to see if I can answer any specific questions. Okay, perfect. Okay, so someone asked, even as an agent, don't we have to pay self-employment tax? Absolutely. If you are a 1099 contractor or real estate agent, you do have to pay self-employment tax. Absolutely. All business owners that are sole proprietors have to pay self-employment tax. As you know, or maybe you don't, but you'll know right now, if you are an S-Corp shareholder officer and you are an employee of your business, you are paying self-employment tax. You're just paying it on payroll through your paychecks. So everybody is paying self-employment tax. The big difference is that many investors or investors that became flipper dealers were not aware that they have to pay self-employment tax as a dealer. That's the big difference. Okay, Let's keep going. So the small business accounting workflow from books to taxes. This is where I was talking about what every business owner needs to know. So I'm going to cover not only what you need to know as a real estate professional, but every business owner. So this relates to everybody. So what is the small business accounting workflow? Basically what it is making sure you're completing all of your accounting tasks, then preparing your financial reports accurately, and then reporting all of that on your tax returns. That's it. That is the small business accounting workflow. It's that simple. With my platform, on my entrepreneur platform, both on tustresmaestras.com and on Master Your Books, we have classes that go in depth into the small business accounting workflow. So if you're interested in that, feel free to connect with me and I can go ahead and talk to you about when that next class is, but we go in depth on that workflow. But just to tell you what it is, it's just making sure that you're completing your accounting task, you're preparing your financials, and you're reporting it on your tax returns. And what is how do you complete your accounting tasks, right? This is what we call the books to tax life cycle. This is the life cycle to basically take you from your books to prepare your taxes. You, number one, have to manage your books. And now when I say you, I would love for you all to find some rock star bookkeeper, financial accountant, tax pro to help you. But if you can't, or if you're not in a situation to find somebody, we all know on this call, we're all business owners. I'm a business owner as well. We all need to do what's in this books to tax life cycle. We need to manage our books. We need to manage the money in and out. We need to balance our books. We need to match and analyze and make sure that everything has been ticked and tied. We need to maintain our books in real time. And in accounting, technology and automation allows us to do things in real time. Being able to work mobilely allows us to do things in real time. And at the end of the year, we close our books and we file our taxes. And let me tell you all something. When you're doing manage, balance, and maintain, closing is the easiest part. It's the simplest part. It's like running a marathon and all you got to do is just cross that finish line. You're literally a few feet away and you just reach over and you cross the finish line. That's what closing is. What happens, unfortunately, is that we all try to manage, balance, maintain, and close all at the same time. And we need to stop that vicious cycle. Now, we're going to cover just a few tips on preparing your financial reports as a tax professional. So I'm just going to cover a few tips that I find that are very common when it comes to not only small business owners, but specifically financial real estate professionals. So, you know, they'll get different types of cash inflows, bank deposits that come in, and they'll take this, you know, this information. Let's say they print out their bank statements or they go ahead and give their accountant access to the banking. They go, oh yeah, all my deposits is income and all my expenses, or all my withdrawals or my debits or my checks are all expenses. Ladies and gentlemen, that's completely 100%, 110% wrong. You cannot say that every single deposit is a cash inflow and that it's income until you've gone through every single one and confirmed that. Those deposits can be loans. Those deposits can be owner's capital, meaning you're injecting capital into the business. Those deposits can be a refund of something, or they could be income or commissions. So you need to go through and make sure you're notating that. When you get your 1099 miscellaneous at the end of the year, that may not match what's in your bank. That may not match the total commissions you received. Why? Maybe when you got submitted that 1099 to you, the person that submitted it, the broker, they actually gave you a net 1099. What does that mean? Well, many times the 1099 is net of other expenses. Maybe it's net of your desk fees. Maybe it's net of errors and omissions insurance. Maybe it's net of something else. And so when you're looking at it, you're like, wait a second, my 1099 says $35,000. I know I brought in $50,000. Why is that less? Because they gave you a net 1099. And so you need to go back and troubleshoot what that difference is. Property management reports, the same exact thing. You know, your property manager goes and deposits that net rent received. So let's say you go ahead and you bill $1,000 rent to a rentor, but that property manager gives you $800. You're like, wait a second, it's $1,000 rent. It's very clear. Why is this wrong? Because maybe the property management company is taking out their fee. Maybe they're taking out other expenses. And so you get $100 even though the gross rent was $1,000. You need to go ahead and reconcile that and make sure that you're documenting the right numbers. The IRS gets specific forms from all of you. They get 1099s from all of you. They get 1098s from your mortgage company. They get W-2s and payroll tax returns from your payroll companies. So when you are actually preparing a financial report, you need to make sure what's getting sent to the government is also matching your financial reports. Those are called audits. You need to audit your information. Now, you may be completely overwhelmed and saying, okay, you're going way too much here, Mariette. How do you expect me to learn this? I don't expect you to learn this today because this is financial literacy, what I'm talking about, but I would love for you guys to see the importance of connecting with someone that can teach this to you. You can watch a class. You can join a master class or a boot camp. You can hire a financial accountant that many times we're also trainers, and we can teach you this stuff slowly at your own pace. You want to make sure you're recording transactions from third parties. So remember, many of you in the real estate industry use escrows, you use impound accounts, you have settlement statements, and on those statements and in those accounts, there's a lot of moving pieces. It's not just one number coming from one statement. We all know that settlement statements could have 20 or 30 plus line items. So you need to make sure that you're looking at all those line items and you're documenting those line items correctly in your financial reports. Your tenant balances, are they correct? Are you looking at the end of the year and saying, hey, Jennifer, why does it show me that she still has a balance? She's been paying me rent every month. What's going on here? So you want to audit those tenant balances and make sure that you've been applying all the payments correctly. And also, how are you applying all those security deposits? I mentioned that earlier. Security deposits are not income to you. They're actually assets. They're assets that you're holding on your balance sheet until you have to pay those back. Excuse me, they're liabilities. So learn how to post and purchase. Excuse me, I have to fix that one. Basically, learn how to post the purchase and sell settlement statement. So this is the #1 question I get from real estate professionals. How do I post that settlement statement? All I see is this big, long, legal-sized piece of paper with a debit column and a credit column, and I'm freaking out. So we need to learn how to post that settlement statement. It's not that scary. There's a couple of really cool YouTube videos out there. One of my friends by the name of Seth David, he has a YouTube video that's called How to Post a Settlement Statement using QuickBooks Online. There's another gentleman out there, I believe his YouTube YouTube channel is called Income Digs, and he also talks about that. Mark Kohler, he's another CPA and tax attorney, focuses a lot on the real estate industry. I'm pretty sure he probably has one, and I am in the process of creating a video on that as well. And then also knowing that there are ways for you to classify your sales by property. In QuickBooks specifically, there is a feature called classes, which allows you to see your profitability by property. Many times you're looking at your business just in totals, but if you are investing and selling, or if you're flipping and selling, you need to be looking at your business not only in totals, but also by profitability by property. And QuickBooks allows you to do that. Okay, this I'm going to go through a little quicker for 2 reasons. These are just, this is just a checklist on what you need to do at the year end. It's called my year end checklist, and I actually have a video for all of you that you can watch afterwards. So let me just go through the different areas. So you want to capture and classify all your activity. You want to record your business expenses, especially those that you use personal funds to go ahead and spend on your business. As I mentioned before, you want to audit all of your accounts. You want to deep dive into each one of your financials. Again, I was telling you about audits and reconciliations. Any kind of owner transactions you've been doing, you want to make sure that you're capturing those. If you're an S-Corp, they're called shareholder transactions. You want to prepare, as I mentioned before, the tax forms to stay compliant, like your W-2s and your 1099s, and you want to review your financials in depth. Now, you're getting ready to prepare your reports for taxes, meaning you're going to send them to your tax professional. You want to make sure you send it to them in the right tax basis. You want to provide them with an asset list for depreciation calculation. If you're trying to get the auto expense, you cannot get it without a mileage log. You want to make sure that you have all your documents stored. You also want to make sure that you provide your tax professional with the current ownership information. You want to make sure that you're matching your tax returns line by line with your reports, your financial reports, and your tax pro is going to provide you an adjustment list of adjustments that you have to go back and make into your books. You want to make sure that the year end for 12/31 of 18 matches to 1/1 of 19. Then you want to close your books and password protect them. So right here you see there's a link. I have an actual full-blown video on every single one of these items and how to go ahead and deep dive into them, so you can watch that on your own. Okay, so now let's talk about organizing your documents to prepare for taxes. So as I mentioned before, this is a lot of stuff. I understand that. This is tons of information, and it could be very overwhelming if you're trying to do this on paper, or you're trying to use your bank statements, or you're trying to use an Excel spreadsheet. And so we want to take you from the bank statements and the shoebox to a cloud storage like ShareFile or Box or OneDrive, and then we want to take you to an electronic accounting solution. So where do you get started? The first thing you want to do is you want to have a folder structure. So these are two examples of what folder structures may look like. Now, you may be like, Mariette, are you crazy? I don't have everything in a cloud storage, and I don't have it all labeled 1 through 12. I get that. But remember, ladies and gentlemen, this is what I do for a living, and this is what I teach my clients, so that way they can stress less. I want you all to stress less. And so if you're a real estate professional, this is what I show my real estate professionals. Just go ahead and create just literally a folder in Dropbox or in Google Drive, and just label them 1 through 10, 1 through 12. And then what you can do is two things. Some of my clients, and that's why I have this highlighted on the top, they may just have one folder and they just call it 2017 and they stick everything in there. Is that the best? No, because they're going to have to go back and organize all that. But is that one way? Yes, it's one way. I would prefer you guys go and number them and go ahead and say all of my receipts and my documents around sales is going to go to box, into folder 1, expenses into folder 2, and go on and be more organized. It's just going to help you in the long run. Now, this is an example of an investor dealer. Now, if you can tell, I just went ahead and highlighted a couple of the boxes that are different. Remember, investor dealers are needing to capture purchase information, purchase docs, escrow docs, property income, property expenses. Are they contracting labor? They need to capture all of those 1099 vendors. And so I just want to let you all know, you need to create your own folder structure that makes most sense to all of you. And that's what I say right there on my tip. Folder structure should be based on your accounting profile and your operational workflows. Okay, so let me just give you 3 simple ways to go ahead and track all this information, right? Because I've given you the context of identifying with the real estate profile. I've also given you the importance of completing your small business accounting workflow, right? Very, very important. Now I want to go ahead and give you some options to catch up, right? You can go ahead and create a manual ledger. Not that I'm recommending that, but you absolutely can do that, okay? You can go ahead and use the good old spreadsheet, right? Many of you like Excel. The issue with Excel is that there's still so much manual reconciliations you have to do. Or you can use the easier and electronic automated way, which is an accounting solution like QuickBooks. Now let's go over quickly on which QuickBooks is right for you. This is a question I get quite a bit. Which QuickBooks is right for me? And I'm going to go ahead and answer this just in a few minutes. So the first thing you have to understand is that QuickBooks is the core accounting system for your data. It's a database for you to go ahead and grow with and serve your needs. And so when I say that, you want to be able to choose the QuickBooks that's best for you. So after you realize, okay, I want to use an accounting solution, you want to start with the first question, which is, do I need a cash basis accountability tool? Meaning, can I just be cash basis? Do I just need to essentially prepare a Schedule C and file my taxes? Or do I need a full general ledger accrual accounting system? Meaning I need to go ahead and capture AR, accounts receivable, accounts AP, accounts payable. I need to create invoices. I need to go ahead and see both ends. I have to do debits and credits, journal entry. I need to be able to have a full ledger of my business and also full reporting, like the profit and loss statement and the balance sheet statement and the cash flow statement. That is the very first question you're going to ask yourself. And you can get help with people. Many people will help you answer the question. Once you decide on whether a cash-based accountability tool or a full general ledger tool is what you need, then you're going to be able to choose between two versions, which is the QuickBooks Self-Employed, which is the cash accountability tool, or the full suite, which is QuickBooks Online, which has 4 versions, which I'll share in a moment. Once you know you have to use QuickBooks Online, then you start asking yourself those other questions I have on here. Do I have workers? Do I have inventory? Do I want to be able to see profitability by property? Do I need to capture my sales and accounts receivable? And all these other types of questions that you need to be asking. Then you want to select the right QuickBooks for you. So let's go do that together. As I mentioned before, if you just need a cash accountability tool, Self-Employed is going to be the right one for you because it's meant for Schedule C 1099 freelancers that are cash basis. You could be W-2 as well because you may be a part-time worker and you may also have self-employed income. It works perfectly. You may be using your personal account in the past. Not that we encourage that. I always encourage my clients as soon as I meet them to use a separate account for business transactions. But if you've been using a personal account, you're able to separate business and personal. And you're probably a sole proprietor and a solopreneur, meaning it's only you yourself. So you're fine with just having one user. Now, if you need more than that, you want to consider what's called the QuickBooks Online Suite. And there's 4 different versions. There's the Simple Start, Essentials, Plus, and Advanced. The reason why I'm showing you Simple Start, Essentials, and Plus first is because Advanced is truly our highest, most comprehensive enterprise version. And many times it takes you a while to get there. So you're really choosing between Simple Start, Essentials, and Plus. And you're really choosing based on whether or not you need multiple users, whether or not you want to capture accounts payable and accounts receivable, and more importantly, if you are a flipper dealer or even an investor, you want to track profitability by property, and you could only do that in the Plus version. And that's what I basically put there on the bottom for you, who it's best for. At the very end is Advanced. Again, that's really more of the, the most advanced version. It's for multiple users. It's when you need premium care, and that's when you would choose the Advanced version. I actually have access to this entire infographic on my website if you want to go and take a look for you. Now I come to make this much more simpler, ladies and gentlemen, specifically to everybody on this call. How do I select QuickBooks Online for me? For the agents and the brokers and the investors and the dealers on this call? Well, if you're self-employed, if you're a Schedule C basis real estate agent, commission only, self-employed, QuickBooks Self-Employed is perfect. If you are a real estate professional that does need full general ledger accounting, so you need your financial reports, your balance sheet, your income statement, your cash flow, and you want to customize your accounting, you're going to want to consider Simple Start or Essentials. If you are an investor or a dealer and you require profitability by property, you're going to want Plus. And if you're a growing enterprise with advanced needs, you're going to want Advanced. Okay, so now let's go ahead and talk about if you were that real estate agent, and I knew that that was going to be the majority of everybody on this call, so that's why we went ahead and specifically are going to share a case for all of you. So this is Sophia, and to be honest, I love Sophia. I meet Sophia all the time. Sophia is that first-year real estate agent. She is on fire. She is, first time filing a Schedule C because she's been a wage earner all this time, and she's super smart. So she still has that W-2 income part-time, but she's going full-blown into her real estate agent role. And so she just started this year. She received some 1099s. She's driving around for her meetings and her open houses. She went ahead and contracted some help, like a stager to stage her house, a photographer to go ahead and have some really awesome headshots, and she went ahead and built out this really cool website. So she hired out a few outside services for that. She works out of her home, but she also rents a desk space at the broker's office. And she has been using her personal account, but because before today, she didn't know she wasn't supposed to do that. So she's like, oh man, I have been using my personal account for my income and expenses, but I want to go ahead and resolve that issue. And she needs to file self-employment taxes, pay them, and also file a Schedule C. So what does Sophia do? Sophia considers QuickBooks Self-Employed. Why? Because QuickBooks Self-Employed is going to allow her to work on the go because she is driving around. She's a road warrior. It's going to allow her to track that activity that is in her personal account and separate business versus personal. It's going to allow her to categorize those items so she can prepare for her Schedule C tax return. It's going to allow her to capture receipts mobilely so she can make sure to be audit proof and be capturing that documentation. Again, very, very important. She's going to be able to project her income so she can calculate her estimated taxes. And most importantly, she's now going to have visibility. She's now going to have clarity and be able to make stronger decisions when it comes to looking at her finances. So let's look at some of that stuff in action. What do you mean by tracking mileage automatically? When she tracks mileage automatically, basically what's going to happen is that she's going to be able to turn that on the app. She's also going to be able to instantly track and organize her expenses. And she's also going to be able to organize her receipts and save them with a snap. But what she's going to appreciate most when she starts using QuickBooks Self-Employed is that she can bring in every single one of her banks and credit cards. Now, I'm not saying she should do this herself. The only reason why I don't say that is because I've been doing this for the last few weeks for some sole proprietors. And, you know, bringing in that bank and credit card is simple for us, you know, professionals in QuickBooks and proficient in QuickBooks, but for someone that's never used self-employed, it's also worth that time to make sure someone walks through. What does it mean to pull in my accounts? What does it mean to categorize my expenses and my income? But she will be able to bring in her automated bank feeds, and it's an unlimited amount of bank feeds. She's going to be able to categorize those transactions and separate the transactions between business and personal. And most importantly, she's going to be able to prepare for her tax appointment because, again, she wants to be efficient, but she doesn't want to be spending all day on this. And perfect example, yesterday, I went ahead for 3 hours and I spent a call with one of my sole proprietors. We went ahead and set up QuickBooks Self-Employed, brought in 3 different banks and 1 credit card. We categorized everything, and we essentially populated the Schedule C in a matter of a few hours. And so it was really, really cool that she was able to take advantage of that. Okay, everyone. I told you it was going to be jam-packed. So I'm going to try to keep about 5 minutes for questions, and that was my goal. But I want to do a quick bonus round because, again, we wanted to just, you know, do a jam-packed session here and give you hopefully everything you need to go ahead and set yourself up for success. So let's finish with a bonus round. So what if Sophia needs to catch up on an entire year of accounting? This happens all the time. Mariette, I'm super excited. I just watched your webinar. I attended your training. I'm totally in agreement that I need to catch up. But guess what? I didn't do this for 18, and now we are 2 months into 19. Am I totally messed up? Is it too late for me to get myself in a good place? And the answer is absolutely not. It's not too late. So what are Sophia's options? The first thing she can do is she can use Excel. And so this infographic is an infographic that I can make available to all of you. It's part of my Success My Assist platform. And we actually have a full free series called How to Catch Up on Your Accounting using 3 different ways: Excel, Self-Employed, or QuickBooks Online. All you need to do is subscribe to our newsletter and you'll get access to this infographic if you want the full infographic. But basically, let me tell you what it is. If you use Excel to catch up on accounting, these are the steps you'd need to go ahead and take. You'd have to collect all your documents, all your statements. You'd have to download all your transactions into Excel. You'd want to go ahead and categorize them all in Excel. So put them into categories, want to sort and organize them, and then essentially create a manual profit and loss in Excel. If you use QuickBooks Self-Employed, if you're a simple Schedule C filer like Sophia, all of that is done automatically. You're essentially going to just bring in those banks and those credit cards and then categorize them. And most importantly, you're going to separate them between business and personal. If you use QuickBooks Online, because you have a need for full general ledger accounting, and financial statement reporting, then you're going to essentially do the same thing you do with Schedule C, QuickBooks Self-Employed, that same exact process where you're going to upload the bank feeds and categorize that. All of that is beautiful and simple and easy, but you're going to have much more robust reporting that you can do in QuickBooks Online than you can do on QuickBooks Self-Employed. And that's why it's critical that you know which is the right solution for you. Is it self-employed or is it one of the 4 versions in QuickBooks Online? And last but not least, I want to leave you all with the top tax deductions for real estate pros. This is all also available on my website. If you go to my website, I actually have a landing page for National Association of Realtors, NAR, and I have this in a PDF, but you all have it right here in front of you. And these are just some top tax deductions that I get asked quite a bit from real estate professionals, and these are just some strategies that you can take and you can discuss with your tax professional. All right, so key takeaways. Learn both the similarities and differences of real estate accounting. Understand why it's important to know both general accounting and real estate accounting. Identify with that real estate accounting profile, who are you and what do you need to make sure you're aware of, right? Main points I made today, and I stress them: investors, capital gains; dealers, ordinary tax rates, right? Learn the small business accounting workflow. Review your data for accurate accounting, because the more accurate your accounting, the more tax efficient your tax preparation will be. Learn the year-end accounting process. Take advantage of electronic storage so you can have easy, organized, and audit-proof access for your documentation and for your taxes. And empower yourself, ladies and gentlemen, as you did. Just like you felt it was important enough for you to be in today's 1-hour webinar, empower and enrich your life with the learnings, with the tools, with the people that are going to allow you to be more organized and allow you to have financial visibility in your business. Okay, so let's go ahead and open it up for some questions. Let me go ahead and open up the questions. And I'm going to do my very best to answer some of them. I know there's quite a bit of them. So this is what my promise is to you. My promise is to you is to answer some of these questions and also to stay a few minutes afterwards to see if I can answer any questions. And also, please all know, as I mentioned before, you are an industry I'm incredibly passionate for and about. Connect with me on social, connect with me through email, attend my trainings, because they really have been written and built for all of you. So that's my promise to all of you. But let me get to the questions here. Okay. There's a lot of them. So you know what? If you want to ask your question again, it's probably going to be easier because it's going to be hard for me to go back and then to the beginning. So if you want to ask your question, feel free to ask it again. Okay. So somebody asked me, somebody said, okay. Okay. Oh, very good question. So somebody asked about, when you are a sole proprietor, how do you choose between QuickBooks Self-Employed and the other versions, right? So remember, ladies and gentlemen, sole proprietors could be real estate agents, but sole proprietors could also be real estate investors or real estate flippers. And so it's not so much what your tax entity status is. A lot of people focus on, well, I'm just a Schedule C, or I'm just an LLC, or I'm just an S corporation. It has nothing to do with the tax entity status specifically. It has to do with your real estate accounting profile. So based on how much detail you need, that's when you're going to choose which version you need. Now, specifically for QuickBooks Self-Employed, you cannot be anything other than a Schedule C. So if you are an S corporation, as an S corporation, you are required to have full general ledger accounting. So you are going to want to use one of the QuickBooks Online versions. Okay, yes, I have a great question. What if you're an agent and you also have income properties? Well, let me tell you, that is a very, very common situation. You started as a sales agent, then maybe you bought some property, so you're an investor, and maybe you're investing personally, so that's probably on a Schedule E. So it's still just a passive investment as a Schedule E property investor. But then let's say you decide to buy and flip two houses in that same year. Ladies and gentlemen, guess what? You're going to have a Schedule C as a real estate agent with commissions. You're going to have a Schedule C as a real estate flipper. And you're going to have a Schedule E possibly as a property owner and an investor. Do you see why at this point you will probably want to have a serious call with your financial accountant and your tax professional, because you got a lot going on. Now, just to answer it from the perspective of QuickBooks, if you have multiple entities, every entity needs to be in its own QuickBooks. So maybe you're going to have your real estate commissions in QuickBooks Self-Employed, but you're going to have your flipper business, your fix and flip business in QuickBooks Online Plus. You're going to want it in Plus because you're going to want to be able to see profitability by property. It seems like I have a lot of accountants, bookkeepers, and tax professionals. I love that. So thank you all for being here, because I want you all to serve this industry the best way possible. So thank you all for being here. Okay, so just to be clear, if you are a Schedule C, so in other words, if you are a Schedule C sole proprietor, you can use QuickBooks Self-Employed. If you are a private owner, so in other words, if you have your property on the Schedule E, which is, you own a property, right, and you rent it out, you can own one or two, you can actually have your property in QuickBooks Self-Employed. I actually own a rental property, and I account for the income coming in and the expenses going out as a Schedule E using QuickBooks Self-Employed. You can use that, absolutely. For pricing around QuickBooks, please go to either my website, which is MarietteMartinez.com. And if you go to my website, I actually have a partner page specifically for QuickBooks, and you can go ahead, if you're watching me now, you click on partners, and then you click on Intuit, and you can go ahead and click through and find pretty much all the information around QuickBooks, and then it's going to take you to the current pricing as well. So feel free to go ahead and take a look at that. This call is being recorded, and the great news is, based on my discussion with Peter earlier, was you're all going to get this very, very soon. If not today, tomorrow, you're going to get access to the recording, which you'll probably want to go ahead and listen to much slower because I know I went fast, and all the handouts as well. All right, let's see if there's any other last questions. Okay, thank you all for saying that you've enjoyed today. One thing I will want to ask all of you, well, two things. First one is, I know I've been seeing a lot of people wanting to hire me as a tax professional. Ladies and gentlemen, I no longer provide tax preparation to new clients. I'm focusing specifically on public education that empowers small business owners, specific industries like the real estate industry, and their partners that serve them. So I'm a public educator now, but if you are looking for a qualified professional, I've created a network of qualified professionals, so you can ask me for a referral and I can help you with that. The other thing I wanted to go ahead and mention, I mentioned quite a bit my YouTube channel. The reason why I did that is because I have an entire channel on real estate accounting. So if you actually went to my YouTube channel and you looked up real estate accounting, the playlist, you're going to have several videos that focus on real estate accounting, in addition to that 3-part series I mentioned with Lisa Puerto, where I go ahead and deep dive into each profile, the investor, the agent, and the flipper dealer. So I just want to make sure you all know where that is. Okay, perfect. Let's see. Thank you all. Thank you all. Okay, so somebody is asking about meals. I know everybody wants to know about the meal law. So I am going to suggest two things. First of all, Mark Kohler, I mentioned him earlier. He has an awesome video on the new meals deduction. So you can literally just go ahead and search Mark Kohler Meals, and he goes ahead and deep dives into the dining and meals expense for 2018. I have a newsletter that I send out weekly where I talk about specific accounting, bookkeeping, tax topics, and small business topics. Feel free to sign into my newsletter right on my website, and you'll also get these kind of tips. But remember, ladies and gentlemen, there is YouTube University now. Just make sure you're following the right people, the smart people, and a lot of this stuff you can go ahead and research on your own. Okay, if you're looking at my screen, I have Mark Kohler up there, MarkKohler. Again, as I mentioned before, I strongly suggest for you to look up my real estate accounting playlist, because there's not only Mark out there, there's tons of people that focus in the real estate industry, and you can go ahead and take a look at that as I meet more people. And if anybody on this call has a YouTube channel and focuses on really strong, strategic, smart, and ethical tips around real estate accounting and taxes, please let me know and I will absolutely add you to my playlist. Okay, everyone, I actually have to jump into another training. And so again, I'm so incredibly grateful to have you all here. And oh, one last thing I wanted to ask you, again, I have a big ask. So if you like this, we're going to go ahead and send a survey at the end of this session. Please, answer, honestly, sincerely. We love the feedback. If you want more of this kind of training, let us know. We'd love to hear that from you, and we'd love to consistently give you this, this training, this powerful and impactful training, if you liked it, if you want it, and if you feel like you need it. All right, everyone, thank you so much for being here, and I look forward to connecting in my next training. Bye-bye.